Good afternoon, everybody. Thanks for joining the webinar this afternoon. This is Mark Popovich. I'm the director of the Good Companies, Good Jobs initiative at the Aspen Institute's Economic Opportunities Program. We're pleased to have so many people join us today. We're excited to see the enthusiasm for the Working Metrics tool. After our launch in late October, we wanted to schedule this session to provide a more in-depth look into how the tool itself works and provide the opportunity for folks on the line to ask more questions. But before we kick things off, I want to go over some of the logistical details. Just so you know, the webinar is being recorded for future playback, and it will be emailed to all the people who register for the call today and posted on our website. We'll post the recording on our website as well. The slides will be available for download as well. You as participants are in listen-only mode. You may, and we encourage you to submit questions anytime, either via the chat, or there'll be time for question and answer at the end. Please use the Q&A box on the bottom center of your screen to send us any questions. For technical issues, please contact us via chat or email tony.mastria@aspeninstitute.org. So first today, I want to introduce myself. I've joined the Aspen Institute Economic Opportunities Program as the director about 2 years ago after a fairly lengthy stint at the Hitachi Foundation, where I was working a lot on the role of business in society and how employers, businesses as employers, create economic opportunities, particularly for people who've been too long left out of the economic mainstream, and in doing so could create a really good business value. So businesses that did good and did well. And I'm joined today by our partner in this endeavor. We launched the product and a partnership in late October, Larry Schlang.
So hi, everyone. Once again, thanks for joining in and listening in today. My name is Larry Schlang. I'm the CEO of Working Metrics. And as Mark said, we've partnered with the Aspen Institute. And our focus at Working Metrics, along with Aspen, is to take Aspen's and their expertise and their network around employment, and to, as you'll hear today, build a technology platform that makes it easy and meaningful for companies to be able to measure, benchmark, and score their people performance or job quality. You'll learn more about that now.
So the argument for why we need to do this, there's a lot of studies, there's a lot of research, there's a lot of evidence that companies can choose the high road with their treatment of employees, and they can outperform their peers. By doing well and doing good as a business model, it works. This is true for delivering high job quality. As you can see from the index line on the right side of your screen, companies who are selected among the best companies to work for that are public traded companies really do outperform over many years their constituent index. So the returns to shareholders, the returns and values of the firm are evidenced just by that slide alone. The McKinsey study documents, they come out with a study every year. This is the most recent one that they had released last year. There'll be another one in 2019. The value to companies of addressing inclusion and diversity in their models. Again, focused mostly on public traded companies. And then the Good Job Strategy by Zeynep Tan and the Doing Well and Doing Good report were focused in terms of Zeynep's work around the return for doing well by employees in even price-conscious, low-margin retail. And the Doing Well, Doing Good report by Hitachi Foundation was around other companies in manufacturing and in healthcare that really found that they could increase their financial and business performance by doing the right thing by their employees. So our theory of change around this product is that really money talks in business, and money will drive change in behavior by businesses, but in order for money to make that change, they have to know which businesses are doing good by their employees. So which is a good jobs company. And we've set up the software as essentially the icon for the screen and the computer. We're providing the definition of job quality for frontline workers. We've identified a low lift of data reporting by companies, and we've created the analytics and the benchmarks in order to score and display the results according to how that company performs against its peer-like companies in the same industry and in the same subsector. So what we're trying to do is provide or facilitate the exchange of information and insight while minimizing the burden for the reporting companies. So we think that there's a large market out there for this and a lot of uses for it. I'm going to focus on a couple of these. Public and private procurement. We know we've had experience in beta test with a live application of the software, how companies who are the head of the pinnacle of a supply chain, they're interested primarily in price, quality, and reliability, and they are interested in the people performance of companies, which they can find out from the Working Metrics software, because you can't maintain price, quality, and reliability over time without good people outcomes. So these are the kinds of channels or spheres where we think this software is useful. Economic workforce development, community development, chambers of commerce are often our partners in local regions who want to find out more about who are the best employers in their region, who are good employers, and want to identify them as such and recognize them. So how does it help? So in terms of employers, it really does about reputation, particularly in a tighter labor market that we're fortunately in now. To have a reputation validated by a third party like the software system with strong, legitimate, rigorous benchmarking. Having that reputation allows you to have the talent, that you get them and keep them, to win contracts, and to really outperform your competitors over the long term. For investors and lenders, it really goes to material to the question of what is the risk of lending or investing in that entity. Right now, a lot of that is focused on the financial performance and some of the business metrics. We think the largest individual budget item, which is the payment for people involved in the organization delivering its product and services, has been overlooked as a source of insight and a necessary issue to address. We built a system that allows you to assess that and get another insight in addition to traditional measures of the risk of that company. And for communities themselves, you may want to begin to look at yourself and identify yourself as a good companies, good jobs region, because it really will help attract people to come and stay as workers and for companies to relocate as well. So this is a pretty big marketplace. We think we can play a part in starting to help this market begin to address people performance and job quality. You can see the numbers here. Anchor institutions, which are like universities, hospitals, social institutions, community organizations, they purchase about $500 billion a year in goods and services. Currently, most of them are not addressing this issue of people performance and job quality among their suppliers. Government procurement at all levels, federal, state, and local, is $2 trillion annually. And an important influence is impact investors, $12 trillion in the United States alone right now. That's mostly focused on ESG, or environment, social, governance factors aligned investment. A lot of it is driven towards investment in publicly traded companies. We think we see more and more of this going towards other kinds of segments of investment market, and that includes mezzanine and equity investments in companies. And we think the tool can help them get an insight for that. So let's shift now to how the tool itself works. And I'll turn it over to Larry Schlang, our partner.
Right. So thanks, Mark. So Mark told you a little bit about what we're doing and why it's important and the huge impact that it can drive in terms of improving job quality in the workforce. Well, let's take a quick look at how companies actually use it and use working metrics to measure, benchmark, and score their people performance. So if you saw our launch event, you saw that on the panel was the VP of procurement from the Tri-Health Hospital System in Cincinnati. And he talked about how they used working metrics as a part of a recompete of a very large contract for medical equipment. And the competitors for the contract were several multi-billion-dollar companies. So in addition to their standard RFP process where they ask questions about price, quality, and experience, they wanted to know about the bidder's job quality to help them assess the bidder's long-term reliability throughout the contract, and to encourage as well, good employment practices among the, by the companies that they work with. So in order to use the application, the first thing that Tri-Health did is they used the application to invite all the bidders to the site. So they each got a customized invitation, the type of thing that you're looking at now. Once they click the Get Started button on the invitation, they're taken directly to Working Metrics where they fill out a brief company profile. The application automates the entire process and walks users through the entire registration and data process. So the first thing they do in the profile is they fill out a little bit of company information, like the name, for example, minority ownership status, if there is one, the percentage of workforce made up by 1099 and temp workers. But the most important thing that they fill out is their company's industry and sector. And this is important to ensure that the company is compared, the competitor is compared to the right industry benchmarks. And in that way, what we're doing is we're helping companies compare themselves to the same type of companies in their marketplace. In essence, comparing apples to apples. The next screen allows you to identify additional users to help manage the account or to review the company's results once they're done. Next, they'll be prompted to provide the address of the company's headquarters. You also have the ability to list addresses for other company facilities. This can come in handy, especially if you have been asked to supply employee data for one or more specific locations. The next step in the process is to actually supply your data. There's only four, as you see up here, 4 columns of different types of data that we ask for. The first column is asking you to enter an ID number for each employee. This can be your employee's social security number or any other unique and durable ID number. In the second column, we ask you to fill in the quarterly wages for each associated employee number, and that's for the most recently completed quarter. We also ask you to do the same thing for the same quarter 3 years prior. In the third column, you provide each employee's gender, and in the fourth column, you enter the race and ethnicity for each of the employees. For most companies, this is an extremely easy and fast process. Most companies have an HR or a payroll system that already has all this data, which most of the companies have, and they're also required to have. The wage data is essentially the same type of data that they would supply in their quarterly unemployment insurance reports, and the diversity data is the same type of data that larger companies supply as part of their EEO-1 filings each year. So really the process is really just clicking a few buttons out of those reports and to generate the data that we need. The system also asks The system also asks 3 questions regarding your company's employee benefits to determine whether the company provides plans or benefits for health insurance, paid leave, and retirement, and whether those plans are actually quality plans that meet or surpass the industry averages for the contributions that their industry supplies for those plans. So once you've submitted this data, which again, you know, the first time you do it, it's probably just because you're learning it, is about 30 or 45 minutes. But the second or third time you do it, it might be, you know, just take 2 to 5 minutes. And wait, you want me to?
Yeah.
So actually, I'll interrupt for a second. There's someone's asked a question. Is it legal to ask companies for employee social security numbers or any personal identifiable information? So first thing is, it's up to the company as to what identifier they want to use. The application does not capture, see, or have access to any individual or personally identifiable information. All this is done on the company's client machine at their site. The information we get, we convert that number on the client's machine at the company site, and we get a completely converted hashed number that is unique to us. So we don't see any of that information. The reason why some companies, when they've spoken with us, have used social security numbers is because they have an interest in tracking employees employees being able to be tracked from one company to the next. So if you think about second chance employees who have emerged from the court system, some of these employees, there are companies that want to bring these employees in, get them some experience, get them a first job, and then be able to help them move up the career ladder by moving to other companies, and then being able to track that over time. Okay. So there are other questions. I'm going to keep moving on. Keep sending in your questions and let us know. So this is the heart of the application right here. This is our one of the key reports that we provide once you finish supplying your data. Your social impact card, scorecard, rates your company's job quality for frontline workers, which we have defined at this point as employees earning less than $60,000 annually. The company's score is based on its performance in the following key metrics, which is compared against the industry averages for job growth, employee retention, wage growth, and the employee benefits. So in this case, this is the social impact scorecard for the Cogswell Cogs company. Cogswell has received, as you'll see at the top, an overall rating of 3.5 stars. That's 1 point higher than the average company in the manufacturing industry in their region. So you see there that they're a manufacturing company, and that comes out of their profile where they've identified themselves as that. As the scorecard shows, Cogswell had an 8% increase in both job growth and wage growth over the past 3 years. That's represented in the chart by the blue bars. And that also shows that they are outperforming the industry averages in both those cases, which is represented by the gray bars. However, the scorecard also indicates that Cogswell's frontline and company-wide employee retention rates underperformed the industry averages. The company's benefit plans also factored into their overall rating by offering multiple qualified plans with contributions that exceeded the industry average in healthcare and health insurance and paid leave. Cogswell increased its overall rating by 1 star. The scorecard also offers suggestions on how to improve your company's rating, as well as indicating the percentage of 1099 and temporary workers. We also capture information about the company's gender and race and ethnic diversity. And we provide you with data and analytics about your company's overall diversity profile. In the gender diversity overview report, a pie chart shows the total number of current employees, as well as the number of employees who identify as male, which is in red in this chart, female, which is in dark gray, and not provided, which is in light gray. The graph on the right shows each gender cohort's respective job quality metrics over the past 3 years. So you see how each of the different groups fare with respect to each other and with respect to the company. So for example, if you look at the retention charts or bars, you can see in black the retention rate for the entire company is nearly 90%. The retention for male employees is approximately 80%, and it's close to 90% for females. When you mouse over each bar, you'll be able to see the actual number of employees, the actual percentage of their performance, and the number of employees in each bar. We do the same thing for racial and ethnic diversity. Again, we show the total number of employees as well as the number of employees in each racial and ethnic cohort. And we also provide insight into how each cohort is performing with respect to job growth, retention, and earnings. Next, Working Metrics provides a suite of other analytics and reports. You can get various other reports which provide you the ability to compare performance of a single company over time or across companies. So in this procurement example, for example, as we were talking about with TriHealth, you can look at all of the different bidders and then see their metrics and their scores compared to one another. In this case, you see that Cogswell Cogs has 4.5 stars, and one of the other bidders, Spacely Sprockets, has 3 stars, and you can not only see their performance in each of their metrics and their benefits, but you can see how they're trending over time. So Cogswell not only has a better score, but they've been trending upward versus Spacely, which has been trending down in a couple of categories. So I want to talk to you a little bit about how we work with the organizations that are using Working Metrics. We see our users, especially as an early stage company, as partners. This is a mission for us to improve performance for businesses, their employees, their partners, and their communities. And we can't succeed in doing that without making each of our users successful. You'll see in the bottom right, probably the key thing that a number of you might be looking at is what is our business model and pricing model. As an early stage company and working in partnership with Aspen, right now for early users, we've been funding this through our partners with Aspen, so it's free to users currently. Beginning in Q1 or Q2 of 2019, we'll start rolling out a business model which will be basically a pricing model that you've seen before. It's a service-based model, subscription fee-based, which will be based upon the number of users or the number of employees within the reporting company and would be paid for by reporting companies. In addition, I want to just note that we, again, as an early stage company, we provide a lot of support. We provide different kinds of training, in-person training, webinars, videos, and we're very interested in doing a lot of hand-holding to make sure that you're successful. We work with users to help them understand the results, and if their metrics are lower than they'd like, We'll help them find ways to figure out how to improve those scores. And last, and very importantly for us, we want your feedback to know how we're doing and to roll those suggestions back into the product, which we've been doing with the users that are already on the system.
So this is Mark Popovich back on again. We've already gotten some questions from the Q&A box on the screen. So the first one is it possible to set our own standards instead of comparing them to the industry standards, meaning an employer standard. You would know the results for your company, but our scoring is based on the benchmarks and the algorithm that we have for establishing the scoring based on performance against those benchmarks. So you would have the results, you would have the precise data that we came to, but it's based on the benchmarks that we've set, and we think the benchmarks is a key benefit or strength of our system, because you can't know how well you're doing without having a good yardstick to measure it against. So right now, the benchmarks themselves are coming from federal databases. We had a question about the source of the benchmarking data. They're coming from federal databases, and they are looked at from the perspective of industry and subsector, and in some cases, subsector within subsector. So we're looking at 1, 2, or 3 level digit coding, and we look at the national data, and we look at some regions to see whether metropolitan regions and non-metropolitan regions are performing substantially different than the national performance. Eventually, as we're on it, this is the first version of the software that's out, so it's tied to a blending of looking across those measures. In the future, we could be tying this to the actual region that the company is reporting from, so it would become more specific in that way. The benefit credit is not broken out by race or ethnicity, because the questions we're asking the company to report on is regarding the plan that they have for the typical employee. So at this point, we're not asking to report the level of benefit provided by each individual employee. We're measuring the company's quality of benefits overall, and the general understanding is that they're reporting benefits that are broadly available within the company. So it has not been our assumption going in that there's a substantially different benefits package for subpopulations within the employer. It is something that we'll look at if we start seeing that in our experience with companies. Of course, on both race, ethnicity groupings and gender ethnicities, we're relying primarily on the data that's available from the reports that companies can generate. And what we like to do is look at what they have now and what's reliable across a number of employers, and then we update as we go through that. So for example, there's a question about Asian. We're looking at the question of how employers typically report, whether they're subgroups within that category or it's a particular category of Asian, Asian American, Asian Pacific Islander. So it's on the development path to figure out the answer to that question, but in some cases, we need to wait until we understand the availability and reliability of data from the employers.
It's the same thing for gender, but the near-term plan is to cover other cohorts in addition to male and female, especially based upon how the employers are doing it.
So Melissa asked us a question about is it useful to think about a structure to allow tracking job quality for a cohort of businesses? And indeed, that we do anticipate that, and that's one of the functions that's built in the being able to compare across companies and then sum that information up. Larry, do you want to?
Yeah, I would and we're actually have regionally based organizations that are very interested in this use case already. So the tack we're taking is being able to aggregate business data, within a region or defined area, and be able to sum that up. And some of these organizations are looking at being able to see not only where their regions stand in the aggregate in terms of job quality, but also look at ways to improve it, and then ultimately to be able to brand themselves as a good jobs, good companies region in order to attract employees and employers there.
Holly, thank you for your question about the categories that we're using as what I'll call the hard metrics, the growth, retention, and earnings. This is based on the experience that we've had looking at a couple of hundred companies who were outperforming their peers in terms of both business and financial performance, as well as their frontline workers outperforming their peers in terms of good outcomes for them, earnings growth, occupational advancement, access to good benefits, and those kinds of things. So we are constantly driven against the prime directive, which is to make sure that the data demands, the reporting burden is not too high, so that we can scale adoption of this. And we consider that when we pick and narrow it into these kinds of categories. We do think we want to focus on what we would call outcomes as opposed to practices, because in some cases you can't tell when a company has checked off on a practice whether they're implementing that practice well, poorly, or in some cases not at all. My experience, for example, has been talking to companies around training budgets, and they often boast the size of their training budgets, and then when you ask how much they spent in the prior year, and particularly in the prior year on frontline workers, it's only a fraction of what's available. So we are being careful about asking about practices as opposed to outcomes, but we are looking at other metrics that either could be included in the benchmarking or they could be included as additional information. Larry didn't emphasize it, but we do have a feature now that was on the scorecard that says the company reports in its profile the percentage of people working in the effort that are not direct employees, that are 1099 contract workers, temporary employees. We don't yet know how to score that, but we do think it's important to know about that when a company is relying on that for a significant portion of their effective workforce. So we would like to continue to develop things like additional information that particularly it could rely on the number of like the kinds of reports that OSHA ratings might be a federal report that we could rely on. The way we define job growth from an anonymous attendee. So we're looking across a 3-year period of time, and in the base year period, they had X number of employees who are earning under 60,000. In the most recent quarter, we're looking at the number of employees who were in the under 60,000 in the base period. They may have risen above 60,000, but we would still count them in this group. And then how many additional employees have they added who are in the under 60,000 cohort? So it's those two combined, and that's their number in that they have, and the percentage growth drives off of that.
I'll also just say we also report that metric and all the other metrics in different slices and dices and different cohorts. So we break it down by different wage cohorts. So we show you each of those metrics for under $20,000 earners, for 20 to 40, 40 to 60, 60 and above, et cetera. So you actually get a look at the entire company and seeing how each of those cohorts are performing in comparison to one another.
So there was a follow-up question, anonymous attendee, follow-up on setting their own standards. So if say you're an investor or you're a procurement agency and you want to set a higher retention standard or standards across a number of these. You have the results, so you can see what their retention rates were, and you can see what their salary and salary growth rates were. So the information would be there to decide whether a company had met your screen or not. On the issue of setting a different threshold for frontline workers, that's definitely on our development path. We think that either because of cost of living differences across different regions, that we might want to set it up so that it can be varied and identified, just as the MIT cost of living varies by county or zip code. We could set it up to key in when a company identifies the region or zip code that it's in, what the cost of living would be. And I think we would be certainly open to working with somebody that wanted to set a different threshold or different standard. And we have the flexibility with the software to do that on a pilot basis. And we're definitely encouraging people to come with us with pilot ideas to experiment with these kinds of changes.
So the next question is, what's our adoption strategy to get employers to use the tool? So if we go back to an earlier slide that Mark talked to, here we go, we're almost there. One more, yep. So when Mark was doing his part of the presentation, he talked about who this type of application and job quality is important to. So the way we're looking at adoption is working with organizations that have an interest in improving, driving new jobs and improving the quality of those jobs and existing jobs. And there's a number of different types of organizations that are listed on this slide where we see the interests are aligned, and where, in a commercial sense, where they're almost like channels to drive the use of the application, to be able to see where companies are at the moment, get a snapshot of where they are with respect to their job quality, and to watch how those companies change over time. So for example, we spent a lot of time talking about a public and private procurement. So TriHealth was an example of a private organization doing procurement and having a two-pronged interest in measuring job quality. One was to get more insight into the long-term reliability of their potential vendors or current vendors, as well as a social mission to raise the employment standards and, as a result, the economic standards of their community. Public procurement, like government procurement, has the same two-pronged interest. They do obviously spend a lot of dollars on different types of products and services. They want their vendors to be reliable. Job quality is an indicator of long-term reliability. And they also have, an equally important interest in making sure that the jobs in their community, that there are jobs in their community, and that those jobs are increasingly higher quality jobs that leads to not only improvement for the employers, their employees, and the community as a whole. And that same type of sort of overlay of interests are in many of these other categories on the slide that you see there. Social impact investors have the same type of interest. They want to invest and lend to companies that they think will ultimately be more reliable returns on investment or quality risk, as well as having sort of a mission or an impact on the quality of those employees. And if you have any other questions about that, we'd be very happy to talk to you about it.
So all I'd add to that is, while each of these is kind of a vertical, we also beta tested this with a lot of different entities within the Cincinnati region. So Janice Urbanik was a great guide to us to introduce us to many of these kinds of systems within her local region. And we have had experience starting in that way and being able to build out from individual employers to procurement systems at the private level at anchor institutions to other institutions like the Chamber of Commerce and the rest. So that's another way, and we welcome people who are working at the regional or community level engaging with us to talk about how that could be developed.
Yeah, there's a whole range of nonprofits and commercial companies and entities where they have the same interests in this, and where they act to bring their sort of stakeholder companies into the process to use the application. The next question is, how do employers obtain access to the tool? So there's two basic ways. One, they can access it directly, and the way they would do that now is to reach out to us. We don't yet provide a self-registration doorway. We're working on that, and that should be done hopefully no later than Q1. But we want employers to be able to do this directly. And then the second way is that they would be invited to access the application by the way we showed you in the presentation. So a stakeholder entity would, a procurement organization or an investor or a workforce development organization, et cetera, would invite them to join. They'd get an invitation and they'd do so.
On the question from Anonymous again, seeing the results by gender, race, ethnicity, in fact, it very precisely does purvey this. Larry always likes to portray the graphic. I'm the one who likes the data, so he didn't put in the slide that has the detailed data where you punch up actually the intersectionality of what were the job quality results for female, Black, African American, what's their retention rate versus all others. So yes, that we have a screen that allows you to look at that very detailed level and to see how those numbers are changing over time as well.
Okay, so the next is from Melissa. My question is particularly about customer pricing structure, whether that can be an umbrella organization or if it has to be the company. So, my short answer is yes. And my non-glib answer is, so if there is an umbrella organization that wants to fund it on behalf of their stakeholder companies, we would definitely talk to you and figure out the right path to do that. So the answer actually is yes. And like I said, in these early stages, we're very focused on getting people on board, driving additional value for them, and learning and growing and expanding the application. And we're working hand in hand with Aspen to make sure that organizations in the nonprofit field can take advantage of this.
You take this one up.
Are the company scorecards, this is from Catherine, are the company scorecards visible to anyone? So a couple of things on that. So the company scorecards are visible to the company itself in the first instance. The company can opt to choose to make their results available to third parties. And to do that, they have to authorize them. So for example, if a company has been invited, let's say a workforce development organization has invited Popovich Inc. to submit their employees.
It's an LLC. Right?
Yeah, Popovich LLC, very good, to submit their data. And I'm sure the Popovich Inc. is a good employer. Popovich Inc. would accept the invitation, and in doing so, they would also be explicitly asked to authorize or not whether the inviting company can have access to see the results. So, and that authorization can be granted, and the company can also take it away at any time down the road. I also want to make a point here while we're here. The company's underlying data is, confidential and proprietary to them. So we keep that data secure, confidential, private. It's not shown to anyone, and it remains the company's data and no one else's.
Just two more things to add on that. Certainly the model here eventually lends itself to some level of certification, right? You're a 5-star or a 4-star company on the working metrics. I think that's clearly in sight for us down the road. But again, that would be voluntary for a company once it's scored, whether it wants to display that. Obviously those that it's more rigorous than, and I think that will be an important application of it in the future.
Absolutely. And as Mark said, the displaying of its score and any other results will always be up to the company.
I also think that this creates an opportunity for us to look at developing predictive analytics from a database over time from this kind of information, blanking the information about specific companies, but being able to study broad swaths of the reporting companies and see what the correlations are between good outcomes and eventually some information about their practices. So we have a question from what industries are covered in the database. So I'm assuming this is about what sectors and subsectors are covered in the benchmarks. So it's really the universe. We begin with the 9 basic either first digit SIC code, standard industrial classification code, or the NAICS code. And then we go down 2 or 3 levels, depending on what we've developed to that point, how much we've been working in that particular industry. So it really does cover the face of the economy so that you're really comparing comparable companies. There's multiple divisions, for example, just in manufacturing or in services. So we have a question from Stephen about we're currently covering 3 kinds of health of benefits. What about measuring financial wellness for groups? I'd be very interested in talking with you and getting more insights about what data could be collected to understand how to measure group financial wellness. And then I think this is around either some practices or some outcomes. And we just need to get some more ideas about what we would be asking for from a company in order to measure that. But obviously, financial wellness is a key outcome from a certain set of practices that a company may put in place.
And one thing that we have been looking at that may fall within that is employee ownership, and looking at that and capturing that information and then being able to benchmark it.
So Bob has asked a question in 2 parts. How about higher learning and training entities fitting into the picture? So it's a kind of like training, education, capacity building. Do you know where those folks who've taken advantage and completed those programs, are they ending up in good jobs? If you had enough companies who were reporting and they were agreeing to report by social security number so that we had a durable identifier across from the institution providing the services into the companies that people are placed, we'd be able to track people over time that came through the program and what their velocity of change was. I think that in addition, there's a potential to refer people looking for jobs to companies who've agreed voluntarily to benchmark themselves. So if you have students who are getting ready to go in the workplace, you could provide as a feature to your placement that we will tell you whether a company has benchmarked itself and whether it's a good company with good jobs or not. So I think that would be another feature in the counseling and placement services. And then I think finally, this is potentially a research tool around a broad range of issues.
And then the last question is, will the tool incorporate other certifications such as B Corp status? So like a number of other questions that came before, again, the answer is yes, we're exploring all kinds of different sort of vectors, where there's an actual ability to measure, a data-driven way to measure different, outcomes for employees and their companies, and then be able to reflect that, measure that, and then reflect it back in terms of the reports and analytics in the company. So the ultimate answer is yes to that question.
So I just take a broader brush stroke to that question, or the broader question that it raises. So there are different tools, either for, a lot of them are focused on publicly traded companies, but some of them are potentially applicable to other kinds of companies that look at either outcomes or practices, and they're formed for different purposes. And I think that there's enough space here for many different kinds of measuring tools for different purposes. And I think we have a particular purpose and focus that is different than B Corp, so or B Lab in terms of their B Lab assessment. We all need at some point, there's this broad ESG, environment, social, governance related investing, and the people who are trying to develop tools and metrics around it. I think we're really getting close to the time where many of us who are working on definitions of social impact, or particularly worker impact, to start talking about whether we're intentionally or just unintentionally being different, and where we can make things somewhat more common so that we can ease reporting burdens on companies who actually want to participate. We're already hearing from companies that they're being inundated with surveys and requests for information around their social impact and around their environmental impact. So if we want companies to report, and we want to make it possible to get this kind of information, some broader conversation to talk, or dialogue between all of us who are working on these tools, is probably a step that we'll need to take in the next year or so.
Any other questions from anyone? Well, if you have some now, or you have them later, there's lots of different ways to reach out, and we would absolutely love to hear from you. You should definitely feel free to contact both Mark and I at Mark and me at the email addresses above or on the slide. You can learn more about the initiative and what we're doing and where we're going at our respective websites. And there's off the Working Metrics site, there's a link that you could also sign up for a demo. But as we showed in sort of the partner and how we work with you slide, we're very interested in hearing from you, and talking with you, even if you just had general questions or feedback, or if you'd like to actually go through a webinar, dig more deeply into the application and seeing how it might work for your organization or for companies that you support as part of the work that you're doing. In terms of the slides, we just got another question. The slides and recording will be available. Yep, they're going to be available. They'll be on Aspen's website, and they'll also be emailed to the participants. So, yep.
So I just want to say a final thanks for all of you to turn out today, and I think we had great questions, and it's clearly you're thinking about these issues in a very sophisticated way, and we're looking forward to further contact with you and work with you and developing some more demonstrations and pilot projects. And a last note, as a personal note, I want to thank the Crackerjack communication staff at the Aspen Institute Economic Opportunities Program for all the support they've given us and opportunities they've given us to talk about this, both in terms of the launch events in late October and this webinar here today. So thanks to Dan and Tony.
Yep, and hopefully in 2019, we'll be doing more of these with probably more targeting towards the different types of user bases. So stay tuned.